Hedge funds implicated in a massive DOJ investigation into short selling. Hedge funds and research firms involved in short selling have been targeted by the Justice Department's criminal investigation, which is looking into whether they improperly coordinated trades or broke other laws in order to profit, according to people with knowledge of the investigation. With the help of federal prosecutors in Los Angeles, the Department of Justice's fraud section is investigating how hedge funds access research and set up their bets, especially prior to the release of reports that affect the stock market. Financial relationships between hedge funds and researchers are being scrutinized by authorities in an effort to uncover evidence of insider trading or other financial misconduct, according to two people who requested anonymity because the inquiries are confidential. Several dozen stocks, including well-known short targets like Luckin Coffee Inc., Banc of California Inc., Mallinckrodt plc, and GSX Techedu Inc., are being investigated by federal investigators, underscoring the scope of the investigation. Several dozen or more companies are being investigated, but it's not yet clear which ones will be the focus of the investigation. According to the people familiar with the matter, the investigation also includes Toronto-based Anson Funds and an anonymous researcher named Marcus Aurelius Value. Many renowned firms have circulated research on the stocks under scrutiny, including Muddy Waters Capital, run by Carson Block, and Citron Research, run by Andrew Left. Anyone who tries to profit from falling stock prices will have to deal with yet another obstacle after the U.S. investigation. During the pandemic, government stimulus lifted prices, prompting some bearish funds to liquidate their holdings. In order to inflict losses on hedge funds this year, retail investors organized counterattacks on popular short targets and bid up shares. Citron announced in late January that it would stop conducting short-selling research and instead focus on long positions. In the meantime, companies that have been targeted by short sellers have grown bolder in their response, sometimes launching legal battles even as they face government investigations that ultimately support the theses of short sellers. Executives in the corporate world are eager to see if the U.S. government can help shift the focus to the investors' tactics. It may be difficult to successfully prosecute short sellers given the legality and even benefit to markets of betting against companies and publishing research believed to be accurate. In the absence of any evidence to the contrary, the authorities may decide not to press charges. Federal prosecutors are investigating whether short sellers engaged in some form of deception, such as misleading the public about their financing of what appears to be independent research, violating confidentiality agreements with authors, or orchestrating stock plunges to panic investors and exacerbate selling. The Justice Department's and Muddy Waters spokespeople declined to comment, and messages left for Anson Funds and Aurelius went unanswered. Although Citron's attorney is aware of an investigation, he says it is common practice for U.S. investigators to open and close cases. He expressed skepticism about the validity of their theories. According to lawyer James Pertuse, Citron Capital and Mr. Left are successful because they do quality research and keep their reports secret from other short sellers until publication. In the case of Citron Capital and Andrew Left, there is simply no truth to the theory that short sellers coordinate amongst themselves before publishing reports. Hopefully, someone looking into the matter will come to that conclusion soon. A variety of deals between hedge funds and researchers have been documented, including the payment of large subscription fees for new insights into possible corporate problems, or the establishment of hedge funds as a primary source of funding for authors. Harry Markopolos, a well-known financial investigator who normally makes money from whistleblower awards, revealed that when he released a report on General Electric Company, he partnered with a hedge fund to share profits. Researchers have been known to deliver damning reports after being given targets by some hedge funds. Cyberpoint Capital, a Dallas-based hedge fund, agreed to pay a short-selling researcher $9,500 per month in 2018. Farmland Partners Inc., a real estate investment firm, was recommended to him by Cyberpoint. Following the researcher's article on Seeking Alpha, which he wrote under a pseudonym, Farmland's stock price dropped by 39%. Quinton Matthews was forced to reveal his identity by a judge's order after the company sued him. When Matthews learned that his article contained inaccuracies and false allegations, he issued a statement retracting it. A settlement was reached between him and Farmland. Cyberpoint has stated that it was unaware of the article published by Seeking Alpha. On the Justice Department's list of stocks to investigate is Farmland. Cyberpoint and Matthews' attorneys declined to make any further comments. On Wall Street, The Justice Department's unit in charge of the investigation has a well-deserved reputation. Multiple lawsuits have been filed recently alleging illegal spoofing of precious metals and Treasury futures contracts by major international banks and traders. According to that investigation, J.P. Morgan Chase paid more than $900 million in penalties after its traders placed and canceled orders for commodities to benefit positions held by the bank or prized hedge fund clients. J.P. Morgan. When suspicious patterns appeared in trading data, they were attributed to specific traders. The investigation into short selling has been going on for a long time, according to people familiar with the matter. After the so-called meme stock trading frenzy that erupted in January, U.S. lawmakers called for increased scrutiny of short sellers, and the investigation gained traction. Retail investors pushed the price of GameStop Corp up more than 700% in a single week before brokerages started limiting bets. It was claimed that hedge funds had been unfairly using their market clout to drive down stock prices. After multiple hearings on the fracas, lawmakers have debated whether short sellers should be forced to disclose more information. Concerns about the tactics used by short sellers have resurfaced time and time again. In an effort to crack down on short and distort campaigns, the Securities and Exchange Commission and the Justice Department had taken action against hedge funds. Typically, the strategy involves placing bearish bets on a company, then releasing false or misleading information about the company in an attempt to lower the stock's price. However, there are also concerns about the impact that unexpectedly appearing high-quality research can have on the marketplace. As Columbia University law professor Joshua Mitz discovered in his research, reports from short sellers can briefly trigger panic selling before shares rebound back to their previous levels. Well-positioned short sellers can cash out of trades and pocket significant gains in those jittery moments, sometimes minutes or hours. Over the course of 5 years, Mitz analyzed more than 1,700 reports made by pseudonymous short sellers, concluding that they contributed to more than $20 billion in dislocated values or temporarily mispriced stock prices. If short sellers are making their case against stocks and then reaping profits quickly and quietly after the news breaks, academics have urged U.S. authorities to investigate this possibility. Several prominent securities law professors, including Mitz, urged the SEC to write rules requiring short sellers who voluntarily disclose bets against a stock to disclose when they have exited the position. The professors also asked the regulator to write a new rule that would make closing a short position immediately after disseminating a negative report, with an intent to do so upon publication, constitute market manipulation. So there you have it. If you enjoyed this video, smash the like button now and subscribe to our channel to be notified when new videos are released.